1. Welcome to StockMarketFunding.com, home to the investor, trader, whoever needs help. We are the home for you. And basically, this is the S&P 500 weekly chart. Weekly charts are much more significant in its nature of understanding the difference between a bear cycle and a bull cycle. We had a bull cycle here when the 10-week moving average flattened out last year, almost a year ago. And we closed 4 weeks above it. There was a time that we dipped below it. But as long as we did not go 4 weeks below it on a closing basis, there was no breach of this current bull cycle. It was a buying opportunity. Because number one, this blue line is a weekly moving average crossed above the 20-week. And as long as that 10-week kept rising all there, every time that we had the little pullbacks in here, you were to be the buyer. But let me tell you what's changed about the bull trend now, going into what we call a bear market reversal trend. The S&P, unlike the Dow charts that you're going to learn, is that we are in the infancy of it. And what do I mean by the infancy of it? We're in stage number 1. There are 4 stages to a bear and a bull trend. I'm not going to go into all 4 stages, but I will go into stage 1. Number 1, that 10-week is starting to go down. That means that the up moves into resistance, like this came up and tested the 10 and 20 week, but it sold right off, made a lower low in the trend. The momentum to the upside is to sell into strength. And same thing on individual equities. You buy them off the bottom, but you sell them, and then you sell short. As long, and we only have, technically, the bottom here counts as 1 week, 2 weeks, 3 weeks, 4 weeks below the 10-week moving average. And the bar did close below it. And it finally has met what we call a bear qualifier, called the Stock Market Funding or SMF Pro Trader Bear Qualifier. So that an investor that holds an IRA or whoever, any kind of volatility or any kind of gap up, people rush in and buy the market, but then the trend has not changed. This is the reversal. The inside week bar, the weekly bar, was narrow range. The outer week was heavy selling. We had a knife hook low. They come in, they tried to buy a reversal trend, and we're currently, let me get this clear, we're currently holding right now, we're holding the bottom of that knife hook low. And bottoms, short-term bottoms, are always put in with volatility, always. And that means that the buyers or the short sellers were covering in that wick, went right up there and hit that 10-week and sold right into it. And that's the problem with the market. You don't buy into the market to hold overnight when this is going on in a bear reversal, number 1. Number 2, what you do is it's more of an intraday trading range or long-term position management trading when we start these cycles. So basically, we were so overbought, these weekly blue bars are called moving average convergence divergences, and we are working off that overbought part of that bull trend off a year ago. But the thing about it is, we have to close 4 weeks back above that blue line. That blue line must be rising, that 10-week. When that's going on, you always buy these dips. There's a time to buy the dips, and there's a time to short into the other side of the trend. Here, you would have never wanted to be a short seller. You want to always be a buyer. But over here, you don't want to be buying up into this resistance and get your head caved in. So we are in the infancy, and we've crossed over this green line is called an RSI, crossed over the percent DA. Percent DS crossed over here. That's a weak sign of it. And this has been eroding and eventually going down little by little. And it's all about, how do I profit? Well, I shorted the S&P at 1150. And I bought put contracts on the S&P. And I'm going to show them to you in another tape. But I just show you them very quickly. And we are professional option traders. This is where the biggest money's made. Here is the S&P. I'm just going to show the S&P on a weekly. You can see the movement in the S&P. They went all the way up here to 8250 on that side of the market, and that's the put side. And we bought this originally. We bought it, if I show you on a 60-minute chart, this is a 60-minute chart of this expiration, but we ended up buying these contracts around $22. and they went skyrocketing on the 1150 put. Um, you can make money when the S&P reverses. So what we basically did here, this is back to the 60-minute chart I'm going to show on the S&P. Watch the S&P chart. Back over here on this area, last year, is where we put in the bottom. Look at that move that we had in the S&P. On a 60-minute chart, you can see, and you're going to learn how to work with the double top 60-minute reversal, lower high reversal, the attempted bottom. So you're going to learn outside of the weekly is what the 60-minute chart, why it's powerful. And so basically, we're in a bear reversal. Back to the weekly. Let me pull up the weekly chart. Better yet, the monthly chart. I didn't get to show you that. The monthly chart is a monthly bar. It doesn't become final until the end of February. But right now, let me show you what we have here. We have a bear reversal. As long as I stay with the closing price above the previous month, half of the bar, that means that until I can close above half of this monthly bar, that this will remain in a bear reversal. When we look at it a monthly, we had a nice monthly trend, all right, all the way up to the top. But things change. Trends change. Market movements change. Lots of things change. And the weekly chart is, it takes 4 of these weekly bars to equal a monthly bar. And basically, working with the time element and working with our mathematical trading platform and our system is that I'm a seller because the long-term bull trend is broke. Until it does a certain thing, it remains a bear reversal before we would ever think about calling it a bull reversal. And don't listen to the pundits on TV and all the crap that you see and read about. Ain't going to do you any good. Throw it out the door. This is what counts. Once again, welcome to stockmarketpundit.com. This is the S&P 500. And you are, until we close back above there, that blue line has to flatten out and you got to close. Just like you did 4 weeks below it. You got to get a closing price above it. It's got to turn around. It's got to look like this to say that we are back in a bull trend versus the bear reversal.